Hey everybody, happy Tuesday. It is 4:24, just after closing bell on the 27th of August. Just finished up my portion for the anniversary event with the market traders and wanted to get out a video update for my trading rooms and just an all-purpose video update for the markets, where things are at, where I think things are going. It's obviously all eyes on Nvidia. Earnings come out tomorrow. I did actually place quite a few trades this week, just trades as usual. It's not like I have to sit here and wait for Nvidia. But Lululemon also has earnings this week, and so does CRM, which is Salesforce, and so does CRWD, which is CrowdStrike. So I do have a couple of extra trades in there. I'm expecting Nvidia to kind of stir up some volatility and some movement. So far, we've been pretty quiet for the last couple of days. Here is my NDX feed on the 5-minute chart. This is the week thus far. We had a bit of a directional play Monday that stabilized late in the afternoon. Today was a little gap lower, came back in and filled, and then went sideways and almost nowhere for the rest of the day. If you look at the SPX, same thing. Little directional play early in the morning, stabilized in the afternoon. Today was a gap and a fill, and pretty much nowhere for the rest of the day. So it is very calm for Monday, Tuesday thus far. Markets really haven't gone much of anywhere. If we zoom out, we know that the all-time highs in the S&P are not that far away. We will see what Nvidia is capable of giving us. So I really see two scenarios. And obviously this is what happens, right? It can go up and go down. I'm not trying to say this is the easiest analysis, but the reality is the market where it is right now. I think to the upside, if this high gets tested, okay, if this high gets tested, meaning we crack the all-time highs and everybody's celebrating, something tells me that we put in a little bit of a near-term top and we decline back into these pullback zones. To me, the healthiest bull market moving forward is not this. Just going to all-time highs and stretching higher and getting over and over and over extended is not a healthy bull market. I think the healthier play would be either one, we come up here and test the highs, and then we put in a bit of a topping pattern, and then we fall down a little bit lower, get in a correction zone. We could look at this swing to this swing, and then look at a pullback area to start looking to get long again. And so if we crack some highs here, I will probably end up taking some bear put spreads or debit spreads, looking to trade ES or SPX to the downside over the next probably 30 to 45 days. A lot of my expirations will probably be out towards the end of September or the first part of October, because seasonally, if we do have a September effect and we do have a decline in September, then I'm looking for pullbacks and retracements and a down move for the month of September essentially. Historically, it's not massive, but we usually see like 0.7% over the last 70 plus years. And then I think over the last 10 years, we've averaged almost 0.9% or 0.92% to the downside on the S&P. So again, I'll just talk about where I'm at with price right now. If Nvidia earnings comes out solid, it's very capable of moving the market probably 0.2 to 0.5% all by itself just with Nvidia. We have other earnings to go on top of that. So if the market's all excited, maybe it gets amped up and gaps higher, but I think that's something that gets faded in the near term as we head into September. If Nvidia misses, then a gap lower and then a retrace, I would be looking to fade that move and trying to get back into these correctional zones. If Nvidia misses, that does put a bit of a damper on this AI trade. I think that starts to hurt tech a little bit, and we might see a little rotation more into the Dow, into the S&P, as opposed to just Nasdaq. But we'll see. I mean, I still want to see a healthy bull market. If the S&P is going to get to 6,000, it's not going to be outperforming all by its own. It's going to have to be all indexes moving together, S&P and Nasdaq and Dow and Russell, if they're all going to move together. We've seen a lot of fragmentation recently, right? Since July, we've seen the Russell outperform and then underperform. We've seen high volatility. We've seen the Dow break new highs this week, while the SPY has not, right? S&P's not at new highs. We look at the Dow. We just broke all-time highs yesterday for that poke up on early Monday morning. So a little disconnected. We're going to see if that kind of realigns and where the chips fall. But where I'm at for the week, the Nasdaq still has a little bit more legwork to the upside. This one could be a pullback to the same type of area. Let me draw a trend line here. So we're kind of on the right-hand side of this aggressive uptrend line. Doesn't mean that I'm bearish. I'm more along the lines of this area, something like this. If we see a pullback to that zone, or maybe even just connecting these highs, I think that's super shallow. I'm going to go something like this. So just connect those highs right there from that July 31st sell-off point, and then see if we have a little swing where any type of slow move to the downside comes back into this area. I think this like 18.7 zone is really good for looking for opportunities to get long on the NDX. So I will be watching that level. Probably just a lot of credit spreads and just stagger them out, see if I'm getting direction right, then I get paid over time. And on the bear side, if we end up popping back up here, I may not fade the Nasdaq at these highs, but if we get back to this high, I'm looking to fade that move. I do have some broken wing butterflies up there towards middle of September and into October, I believe. Let me check NDX here for a second. It is right here with the pin price at 2425, as in 20,425, and that 2425 is right up at this pocket. So if we do head a little bit lower, let me use my arrow tool. So if we head a little bit lower, then that should be looking good for full credit on the broken wing butterfly with also a bit of a profit trap. What else is happening here? Let's go to the VIX. Let me change the workspace back. So SPX there, back to this workspace and VIX. We're sitting at 1542. I'm going to keep an eye on SVXY to maintain a long position. If we have a bit of a shakeout and the S&P drops, we might see the SVXY pull back, and that is okay. If we have a pullback like so, and then a rip to the upside, I would still be looking to go long on SVXY and basically short volatility for the next maybe 3 to 6 months with this particular tool. And SVXY is not really a levered instrument, unlike some of the other volatility plays. So I like this one more so than others, at least for holding at least maybe 2, 3, 6 month duration. But I try not to hold volatility a ton. But this is one that I do like. Dollar index. Keep coming back to the dollar index. Currencies, it's been just beat down pretty steadily since July, and I think the dollar is likely for a pullback. To what degree? If we get to the backside of this wedge, there's some good structure right in here, good structure right in here. If the dollar pulls back in the near term, I'm then looking to continue lower on the dollar. The more and more downside we see on the dollar, we might test this low and then start that pullback. I'm not really looking to continue to short the dollar at these overextended conditions. The dollar's oversold on a lot of time frames. I'm starting to notice some divergence. We also have a lot of support in here. So I don't necessarily want to short at the lows, and I'm not necessarily looking to buy and call the bottom either. So I think on the dollar, I'm just going to wait. I mean, if we have a pullback, great. Let's get a pullback into 102, 102.50, and then I'll look to sell the dollar off more and see how that applies with actual setups across the board with other currency pairs that involve the dollar. But that's my play right there, at least my outlook on the dollar. Oil, quite choppy, quite volatile. I'm keeping some of my trades out of the way. My $65, my $60, cash secured puts in oil, USO. This is the area that would respond. So, I mean, USO is going to be a little bit higher priced. CL is the trade that I'm in mostly, is just crude light futures. And I have for one naked put in CL, I have 3 to 4 long puts. Just to collect a little bit of income and also have plenty of downside. If we have some bigger event to the downside, I want to make sure that my long puts are going to outpace that. And then natural gas, we are dropping once again. I don't think anybody knows when the bottom is going to be in for natural gas. I'm probably just going to stay the heck out of it. I mean, in truth, this might be the play in the bigger picture. Is this might be setting up, this low, possibly a head and shoulders, but it's hard to believe that. So is that our head and shoulders move on this is natural gas? Maybe. Otherwise, I would say it's likely just to keep, testing lows, maybe going lower, maybe doing all this stuff. Maybe it's a good play for 2025 with the big crazy breakout. Maybe it's dirt cheap to put in a couple of puts and credit spreads, but trade at your own risk because who the heck knows. Not my favorite, but I want to watch it because I think the upside of natural gas over the next, the hard part is how expensive is it to do a 6-month or 12-month contract? I don't know. How expensive is it if natural gas goes to zero? How much credit can you get if we're down a little bit lower? So I might actually look into this more this week and see, how far lower can I go, get a decent probability of profit, still be hedged, generate some income. And if it's just a trade, it's just a trade. But I think it's very difficult to predict, the bottom, even though we are coming back into 2020 lows. If we go back a little bit further, natural gas over, this is 2012, 2016, 2019, and 20, all the way back into the 90s. That's an impressive support zone. So interested, but could I sustain a move from 150 down to maybe 130 and still get paid? That's what I'm going to find out. So I'll probably construct a trade in that tomorrow, maybe talk about that tomorrow in another update video. Gold, I still like gold. I think most traders do. Gold's been a healthy market, and it's also been outperforming the indexes, which isn't usually the case, but good on gold for doing it. I'd love a pullback. I don't know if we're going to get one. Either we just stay consolidated here, we get another breakout coming through, September as the Fed's likely going to cut rates, or we see a bit of a top here and gold pulls back and we find some support at this trend line. I'd love to see a bear trap right around that trend line break and then get long gold stop loss below and then try to get back to all-time highs. That would give me some generous gains there. So I'll be watching for that on gold. Silver, I still technically like a lot better just because I can measure the moves and I can measure the highs. Gold is at all-time highs and I'm just measuring, Fibonacci's and extensions and symmetries, and that's fine. But silver, I still have historical highs that we could go after, and I'd love to see silver get to 35 for my first target and then all the way up here towards 48 for my next target. So I trade SI, I trade SLV. Those are my two primary instruments there. Bitcoin retreated off the recent highs. We were up around 65,000, retreated back to 62. Bitcoin, I'm still watching very carefully. I would like to see this on Bitcoin. Again, the dollar gets weaker. I think Bitcoin, gold, silver, the stock market in general have a good chance and a good runway to go higher. If we see Bitcoin go up to some fresh highs and accumulate up here, I'm looking for all-time highs on Bitcoin, but that price is very important to see. If Bitcoin pulls all the way back down to these lows, I'm not discounting this all-time high scenario, but I'm going to have to be buying it, at the lows at 49 or 48,000 for another small dollar cost average. But if we can sustain this area, I do have some trades in Bitcoin futures. I'm long IBIT, BITO, and obviously I'm long Bitcoin. But I'd like to see price action wise if we can get back to these highs. So let's say that we just we come up here, pull back, we come back into a little bit of a flat pattern. I could see that if we make a run to these previous highs and we accumulate right around these all-time highs, to me, some traders might look at this and say, Chris, that's a double top. And I might look at this and say, you could be right. You could be spot on. But this could also be a breakout that gets everyone excited for a rally. And all of a sudden we're talking about Bitcoin at 100K. And I say this because right now I believe like the mining cost is like 73,000. I think it could be higher than that. But, we have a lot of cycles on Bitcoin. And those cycles typically come with, if prices below mining costs, it tends to gravitate towards them. If prices above mining costs, then eventually you have pullbacks and they balance out. And that's been the cycle for over a decade. So if mining costs are above 70 plus, I think we can get there and then see what the structure gives us. Anything else here? The Japanese yen, let me take a look at the currency strength chart. This is today. We had New Zealand on top, along with the Swiss, the pound. We had dollar weakest. Japanese yen, again, some intraday volatility as we've been seeing the last couple of weeks. Strength to weakness, weakness to strength, right back in the baseline, even right here, right back into baseline. So again, a lot of chop and indecision on the Japanese yen. I did actually put on a trade today. I've had this pending in my trade room for a while, but I put on a trade here, just a dollar cost average into the Swiss. This is the Swiss yen. I'm looking at trade 1 and trade 2 and trade 3. So I'm going to dollar cost average in these small positions in Forex, stop loss above, and I'm measuring out if we go high, low, lower high, lower low. I'm looking for symmetry, and I'm looking for, this is 158.63, but I'd be happy with 160 as a price target. I'd say it's good enough. So I'll be measuring symmetry and see if this plays out. There's a really nice head and shoulders. We're sitting at these crazy all-time highs on the Swiss yen. If this means anything structurally, I think any type of pullbacks, I'd like to see some follow through, and we'll see what if it boils down to the Japanese yen getting stronger or it boils down to the Swiss getting weaker. I don't care. I'm just hoping that the trade plays out, and I've got about I'm willing to put about 2% of my account on the line for about a 4 to 5% gain. If I could take it to symmetry, they'd give me about 2.5 to 1. So that's what I'm looking for on this trade. What else do we have here? Mag 7, everything's been pretty quiet this week along with the indexes. China on the right-hand side of the trend line looking a little bit better. Mag 7, we have Nvidia with earnings after market tomorrow. Rates, let's look at the yields versus bonds. Pretty flat on everything today. The 2-year and the 10-year is getting closer and closer to getting out of that inversion. We're now down to 7 basis points inverted. I was watching this for the day. We're getting closer and closer, and I am a bit concerned with this because it's not perfect timing. But man, when you look back since the 80s, when we've come out of that inversion, out of that inversion, out of that inversion. This was a brief inversion there in 2020, but we've had one of the longest runs for a while. Out of that inversion historically for at least the last 30 years has not looked very good for the markets. So either we see this continue to stay both inverted, all right, and we see that maybe yields drop on both the 2 and the 10, and they just don't get above. Maybe the 2 and the 10 drop in tandem instead of the 2 dropping faster than the 10, which gets it outside of this inversion. But I think we have to pay attention to this along with everything else. But I am like legitimately concerned about what this means and how this has fared for the last 30 plus years. So it's something to watch, and we'll keep an eye on it. So that's why I have it on my watch list. We're now 7 basis points inverted. And if this goes back, like we did briefly have an uninversion, or I guess you could say reversion, around that August 5th bottom, but from that point forward, we steepened again to like 15 basis points, 20 basis points. Now we're at 7. So it is something I want to keep an eye on. Mortgage rates, this is 6.46 on the 30-year. Watching that very closely. I'm looking to close on a house hopefully March or April of next year. And by that time, just by nature of the Fed and some rate cuts, I'm hoping this is at least 100 to 150 points lower. And I'll probably still look to buy down some rates and see if I can get a sub-5 mortgage versus, what we've seen for, 7.5, almost 8% over the last couple of years, which is obnoxiously high, and putting those, put us at like an all-time low in affordability. So, or all-time high in unaffordability, whatever you want to look at it, right? So anyway, that is that. Everything in the market's going like pretty well, but expect volatility for the rest of the week. Nvidia earnings after market tomorrow. We also have GDP on Thursday for the U.S. We have unemployment claims for the U.S. on Thursday. We have PCE on Friday, and you throw that in with some Nvidia on Wednesday. We're going to see what happens, and we're going to see how it all shakes out. I do have some trades on all of those. So if I look at my Nvidia plays, let me just go to let's go to the positions here for my account, and I'll show you just based on DTE. So all of my near term, so I should be having profit here. This is around $5,300 in gold, $1,100 in silver. My SPY trade, I'm looking at, let's see here, SPY trade. I've got some expirations out to this week, next week. So because of NVIDIA, I'm trading the SPY out to the August 30th and September 6th expiration. I'm also trading the QQQ out to the September 6th expiration. I'm also trading, this is NVIDIA for just an earnings play. This is, what's the other one here? CrowdStrike is an earnings play. Lululemon is an earnings play. We had Baidu and Baba already print earnings, I believe. And I think that's maybe it for right now. Okay, that's about it for the DT. So between 0 day, so gold and silver, I've got a couple of futures trades that are expiring for full profit, and then SPY out a couple of days to the end of the week, and then also on the NQ, that is a bear put spread that is likely going to expire worthless, but I also have a naked put that expires for credit. It should net about $1,400 when it's all said and done. And then I've got some China exposure there. We're at 26.55. I might get the stock called away for 26.50. I did end up buying some additional shares. So I have 100 shares. I'm repairing it at 26.50. Rolling it and only having 100 shares is not really that important to me. What I might end up doing is just adding in additional exposure. Let me see. Let me check the buy price here. Let me just go to this account. Check the buy price or the trade price. So I bought at 27. It was based on an assignment. So I was assigned. I'm putting in the covered calls. I repaired the stock down a little bit. It gets called away for about $2 of profit. But if I were to roll it and nurture it a little bit, I'll make $1.20, $1.40, $1.50. That's I mean, for 100 shares, it's not that big of a deal. I'll probably just let it go and get the liquidity back. But the trade that I do want to do that with 30, 40, 50 cents here and there and improve my price is Pfizer, and that is right here. So I have 10 contracts long. I'm trying to get Pfizer called away with the diagonal spread at 29, and my break even's like $22, $23. So if it gets called away, I've lowered the debit down quite a bit. So a $25 long call, my debit's now only like $1.50 or $2. And if it gets called away at 29, that gives me a nice like $3.50. So every little bit that I can close out on this diagonal spread or roll it, which I've done a couple of times, it's 10 contracts at 30 cents is $300 improvement in my bottom line. So I'm trying to nurture this a little bit. I don't want to be too cute with it because if we get above 29, cool, it gets called away. Then I also just dollar cost averages some shares. But if it goes down for whatever reason and I'm stuck with Pfizer back at $25, I'm wasting any value that I have in the trade. So for me, this is going to be worth about $1,500 per account. If you go here to my P&L, it's at $10,400, and I'm trying to get it called away. I might do one more roll for another like 20, 30 cents if I can. Maybe if the premium is decent for a week or so. But that's where if I have bigger contract sizes, I like 30, 40, 50 cents adds up a lot. But anyway, for 100 shares in FXI, I'm probably going to let it go. So, all right, I will let you go for today. Thanks for watching. Again, video updates for me this week, so keep an eye on those. I appreciate you watching. I did ask a favor, if you're watching this video, I asked a favor if you could post to my Discord channel, just to send me a message. I know that I never do this. I never ask for direct messages in my Discord because I hate the fact that scammers and imposters out there always use direct messages, which I don't. But what I'm asking is if you will send me a message personally. My profile is all over the place in free group chat, so you can see that profile, send me a message, and that profile is Real Chris Pulver. And I'm asking for any type of feedback and testimonials. If you've been a follower of mine for the last, 3 months, 6 months, 1 year, 5 years, 10 years, I've had a lot of traders for a lot of years. So if I've got anybody around that is willing to share and, let the world know how the experience has been, I would appreciate it. And all that takes is just a couple minutes of your time to throw me a quick message. So if you could do that for me, that'd be great. I really appreciate it. And otherwise, I'll see you later this week for some video updates. We should be back to business as usual on Friday with more live sessions. I'll be doing my YouTube session per usual, as well as joining with A1 Trading to wrap up the week. And then I'm going to a conference with Tasty Trade this weekend at Atlanta, and possibly down to Florida for a little, trip, and then coming back to business as usual next week. So, all right, I'll let you go. Have a good rest of the day, and I'll see you soon in some video updates, and we'll chat in Discord. All right, see everybody. Bye.